Hey everyone, welcome back to my channel. My name is Mike, and if you want to become a profitable trader, you have to learn the basics first. So in this video, I'm going to go through candlesticks and I'm going to teach you how to read them like a pro. So this is going to be the first tutorial of many on technical analysis and trading and showing you my strategy of how to become a profitable trader. So I'd advise you to pick up a hardback copybook, something similar to this one right here, so you can jot down all the key information in my videos. This will help you retain all the information, and also it's very convenient for you to go back, look back in your notes just in case you forget something, and it'll save you having to watch all my videos all over again. You can call it your trading journal, whatever you want. Write down in the comments down below what you're going to call it. Okay, so let's dive in. So I like to use TradingView for analyzing and drawing charts. It's free to use, but there's also a paid option. I'll leave a link in the description below this video. So even if you just want to use the free version just to get started, it's very user friendly. Okay, so here I have my cryptos that I like to watch. So we're going to start off with Bitcoin. So to add another cryptocurrency, you just click add symbol here, type it in, and it will be here in your watch list. So for this example, we're just going to use Bitcoin. So you might be used to a chart pattern like this, where it just goes in a line. But to be a day trader, you have to use candlestick patterns. So we're going to go to see super charts here. I'll just give you an overview. So this is the Bitcoin chart going back to 2018. And as I zoom in here, you'll see each individual candlestick. Now the green ones represent bullish. They're bullish candles in the sense that the price is going higher. And the red candlesticks are bearish candles. They are showing a decrease in the price. So in this time frame, we've got our time frame up here. It's on the day chart. So that means that each candlestick represents 24 hours of price action. Okay. Now I can change this time frame. For this tutorial, I'm just going to, because we can actually see price action. If you look at a day candle, there's not much happening. It can be very slow. It's not really moving that much. So for this tutorial, I'm just going to go into the lowest time frame. So for me, it would be about a minute. And we'll just zoom right in here and we'll just get a sense of what the price is doing. Okay, so you can see here that 4 green candles in a row, and then it sold off. There was a red candle, and there was a big push up here with green candle, and then it started to sell off again. So you're seeing here that the past 3 candles have been very flat. See, there's indecision in the market. Now, at time of recording, I'm recording on the weekend. Not a lot of people trade on the weekend, so there's not much liquidity. So that's why you can see it's dead at the moment. So you see this new candle just forming right here. Yeah, there's not much activity, not much price action. Now I'm going to explain in great detail the anatomy of a candle and how it works and how you can read them. Okay, so what is a candlestick? So we'll start off over here. This is a bullish candle. As you can see here, the price opens here on this line here. And then it probably goes down, stops here, and then buyers come in the market and push the candle all the way up to the tip of this wick here, comes back down again, and the price closes here. Now, depending on the time frame, so for example, this could be a daily candle, it could be 4 hours, it could be whatever time frame you choose. So and these black lines here are the wicks. So that's the extreme, how far the price went below, and the extreme price as it went up high. But this is where the candle closes, and this is where a candle open. That's how you form the body of the candle. So bullish candles are in green because the price is moving higher. And then we'll go over to the bearish candle. So the bearish candle is quite the opposite. So the price opens up here, probably pushes up a little bit, comes back down, and then it completely sells off, goes all the way down to this point right here, comes back up again and closes here. So, and then it'll form the next candle. So again, this is the body of the candle from where it opens to where it closes. And then these are the wicks. So bullish candles, price action is moving up. Bearish candles, price action is moving down. Okay, so maybe you want to pause the video, make a quick sketch in your trading journal, and we can move on to the next one. Okay, so this is bullish engulfing candle. So this is basically a bullish pattern. So as you can see here, the market is trending down. We have 3 red candles in a row, and then the bulls step in here and completely buy up the market. And this candle, as you can see here, has totally swallowed up this red candle. That's why we call it a bullish engulfing candle. So you notice that this is like a trend reversal. You see that the buyers are coming in the market and it engulfed the last candle, and then there's a change in direction, a pattern reversal change. Okay, again, if you want to pause the video, make a rough sketch of this in your trading journal. Okay, we'll move on to the next one. Bearish engulfing. So this is like the opposite of the previous pattern. So you have the market trending upwards. So you have 3 green candles in a row, and then the market sells off here and the bears take control, and you see this candle gobbling up the previous candle. So that's why it's called bearish engulfing. And then it's a signal of a trend reversal. So you see the trend changing. It's nice to see an engulfing candle, because then you can state, okay, I feel like that the trend is changing here. Pause the video at any time if you want to just jot it down, and we'll move on to the next one. Okay, so this is the hammer pattern. So you see this quite a lot. The market is selling off, and then there's a huge sell-off here with a huge wick. Buyers come in, and you can see that the candle reverses, goes all the way up here, and closes here. You can see that it has a long wick and a small head. So it resembles it's very similar to a hammer. And then you have a change in direction. So this would be a bullish pattern. Okay, so the next one here is called the hanging man. So as you can see in the previous pattern, you see a hammer. So this is very similar to a hammer as well too. So like we have, the market is trending upwards, and then it just gets sold off here, and buyers try to come back in to push it back up, but the bulls aren't strong enough, so it just continues to sell off. So anytime when you see a hammer candle, just associate that with maybe a trend reversal. That's the easiest way to look at it. So yeah, we'll move on to the next one. So this is the inverse hammer candle. So again, you have the market selling off here, and then the bulls try and get control. They buy it up, and it closes out here, and then there's a trend reversal. So then the bulls are in control. Again, this candle right here looks like a hammer. So you're associating that with a trend reversal. So this would be another bullish pattern. So this one's called the shooting star. So again, it's very similar to the last one. This one looks like a hammer upside down. So you have a trending market. You have the market trending upwards, and it gets completely sold off here. So much so that you have a huge long wick, and the bulls are just exhausted now at this stage. So the bears come in, and there's another trend reversal. So the market then starts to trend downwards. So as you can see, all these patterns are very similar. Like you just have to try and read the sentiment. Like what is a candlestick trying to tell you? So in this scenario, you can see that the price did push up all the way up here, but it just got completely sold off. So when you have a long wick like that, the market's trying to tell you something, that the bulls are exhausted and the bears are going to start taking control, and there's going to be a trend reversal. Okay, so we'll move on to the next one. Dragonfly Doji. So this is a candle where you'd see where the open price and the closing price are very close together, and it would have very long wicks on either side. So this is showing indecision in the market. So it's a great battle between the bears and the bulls. And the fact that it opened and closed is very close together. It's indecision, but it's also you should whenever anytime I see a dragonfly doji, I'm always very cautious. I think that it's like a turning point pattern, like some there might be a change in the market. Just be very careful. Like there's indecision, and it's always the candle after a dragonfly doji is also very important to keep an eye on. This will normally associate which direction the market is going to go. Okay. So this is the gravestone doji. So very similar to the previous one. Um, the open and close position are very close together. The bulls couldn't keep control here. Eventually just got sold off and brought it back down. Also showing maybe a turning point in the market. Also be very cautious of the candle that comes next, and that will again maybe tell you which direction the market is going to go. But it usually associated with a turning point pattern and maybe indecision in the market. So we'll move on to the next one. So these are just dojis, very similar to the last two I just showed you. They're basically that the open price and close price is very close together, and the wicks could be long, and it's just showing indecision in the market. These are associated with a continuation pattern. So these are spinning tops, very similar to the doji. It's just showing an indecision in the market. It's a great battle between the bears and the bulls, and it's just showing that the market doesn't know whether to go up or to go down. But this is essentially, these are just showing indecision in the market, that it's a great battle between the bears and the bulls. Okay, so I love this pattern. This is called the falling three. So basically, you can associate these where if this was a daily candle and then you get 3 other days, but after 3 full days, it's still, they cannot get past the first day candle. So it's just showing that there's not enough buyers in the market, and it's associated with a continuation pattern. So you can see here then after the third day, it just completely sells off again. So this is associated with a continuation pattern, that it's just the price is not at a certain level where buyers are willing to come in. So it struggles to get past this candle, and it eventually just completely sells off. So this is the inverse of that one. This is called the rising three. So we have a steady uptrend, tries to sell off, but after 3 days, it can't go past the opening of the first day candle. Now, this would be associated with like a trending upwards. So the previous candles to this would be all green and they'd be trending upwards. And then it just completely tries to sell off, but it can't get past the opening of the first day candle. And then the trend just continues. So this would be a continuation pattern. And this is one to look out for. So there you have it. There are just a couple of examples of candlesticks that I like to use that come up a lot. And if you Google search candlestick patterns, you could find hundreds, and you don't exactly have to learn them all off. You just have to understand what kind of sentiment, what they're trying to tell you. And if you just go through what I just said, what I just explained here, you will understand candlesticks and how to read them to prepare for trend reversal or what's going to happen next in the market. So this is the Bitcoin daily chart. As you can see here, this is a perfect examples of dojis, just indecision in the market. It's just continued to go sideways. So right here, you can see in the Bitcoin chart, each candle is on the daily time frame. This is a perfect example of a hammer. You can see that the market completely sold off, has a nice big wick, and it was a nice trend reversal. As you can see, the market then started trending upwards. So this would be an example of like a shooting star. As you can see, the market was trending upwards, came to a point where it completely sold off, the nice wick, and then it was a nice trend reversal and it sold off there, and the price just went down. So there you go, guys. There you have it. I hope after this video now you have a clear understanding of candlesticks and how you can use them for your advantage. Now, in the next video, I'm going to show you how to try trend lines on the candlesticks and patterns, and we can work out where the market is going, where it's going to break out, where is support and resistance levels, and all that good stuff. So if you enjoyed this video and you want to see the next one, I please advise you to go down, hit the like button, hit the subscribe button, and I'll see you in the next video.